Hello, this is Ian Henry of Auto Analysis. Welcome to the first issue for 2012 of the SMMT's production outlook in Europe for cars and LCVs. 2012 will be another year of more economic uncertainty. There's no sign of the Eurozone crisis having been resolved. Economic growth here in the UK has certainly slowed, and there's no sign of it being revived in the short term. The second round of quantitative easing at the end of last year has yet to have had any real impact. Amidst renewed US economic optimism, which is good news for European vehicle producers who export there, and the BRIC markets are still growing, and they're also helping to underpin European demand. On a global scale, the political situation in North Africa and the Middle East has stabilised somewhat, Syria apart, although there are now serious concerns about Iran and how it may disrupt oil supplies through the Straits of Hormuz. Looking at production volumes now, our provisional estimates for 2011 total European production is 19.4 million cars and LCVs, and this number was underpinned by strong demand throughout last year for German premium brands, better than expected performance by the Japanese post the tsunami and the earthquake, and also Hyundai and Kia, and the strength of the LCV market. Our initial projection for 2012 is now 20.4 million, and that will actually be above the 2007 pre-recession peak. And this growth will be driven by increasing production in Russia, the UK, Czech and Slovakia, and on the assumption that new model sales go well, new models from Fiat in Italy. The UK is heading towards 2 million units a year by 2016, and it could even go higher than that thereafter, depending on the success of Jaguar Land Rover and Nissan. Assuming there's no economic collapse in the next year, we do see reasonably good prospects for European vehicle production. We expect to see continuing exports from Europe and strong demand from premium brands helping to underpin production. There's certainly no sign yet of demand slowing from China, Russia and Brazil in particular. Last year was a very good year for investment in the auto industry in the UK. BMW and Nissan confirmed approximately 700 million worth of new investment in the new Mini and the Qashqai. Jaguar has continued to expand its model range, as has Land Rover. Land Rover increasing UK sourcing by about 2 billion with the Range Rover Evoque, and Jaguar Land Rover has confirmed its own new engine plant, construction of which has started. This year has actually also started with rumours of a further expansion at Halewood, which will be very good news for the UK. Last year we also saw GM retain the Luton van plant. Honda started in late September production of the new Civic 5-door, which will be the global supply point for this model, and the new CR-V will start production in late 2012. It was good news for Toyota after a period of bad news. It won an export contract to Japan for the Avensis, it started production of the new Avensis, and it centralised production in the UK of the Auris. Aston Martin, on a more modest scale, is repatriating production to the UK. Bentley is increasing UK R&D and widening its model programme, and we also had record production volumes and sales volumes from Rolls-Royce. Turning to the vehicle companies themselves now. First, BMW and Daimler. Well, the interesting thing here is the extent to which they're going to increase US and Chinese production to reduce their dependence on Germany, or the German production itself will not decline. Last year, they were up by 14% to nearly 1.7 million. The BMW brand was up 13%, but Mini was up 22%. It's undertaken a lot of financial restructuring in recent times, and this will enable the company to remain profitable if the recession of 2008 is repeated. Looking at Daimler, well, it too reported global sales in 2011 up nearly 8% at 1.36 million units. Most of its growth was in NAFTA, up 12%, and Asia Pacific, up 21%. It is now in the middle of an extensive new model program, and the success of the A and B class new models and their derivatives will be essential to maintaining the momentum built up in recent times. Fiat, Ford and GM. The three Euro-American companies will be reliant this year on their new model programs to boost their somewhat faltering prospects. Fiat, undergoing a major organisational change, merging itself with Chrysler, now actually owns 58% of Chrysler. Its new model program has started with the new Panda in production at the Pomigliano factory in the south of Italy. Its Italian factories are undergoing a major refurbishment program. The next factory to be refurbished will be the HQ plant at Mirafiori in Turin. Its very ambitious shared model, platform and engineering programs with Chrysler is proceeding, and the outcome of that will see Jeeps and Rams made in Italy, Turkey and Serbia, and exported to the States. The return of the Alfa Romeo brand to North America has been delayed, and several Alfa model launches have also been delayed. Ford, well, its European operations are likely to be loss-making in the current financial year as a result of the slowdown in southern European sales, in particular production cuts at San Luis and in Spain. And Ford certainly needs new models and a successful expansion into Russia to give its European operations a fillip. 2012 will see the previously announced reorganisation of its European manufacturing put into action. That will see the Transit Connector and the Cougar production move to Spain, full production of the B-Max, a new model in Romania, with the second B-segment vehicle to follow, and a second LCV, a small van based on the Fiesta, we understand, to be made in Turkey. GM in Europe, we also believe, could be loss-making this year. It's still bearing the costs of restructuring. It's got a slowdown in its sales of core models, and it does need new models to avoid a slump in sales. Its export strategy will also be important, and we understand it aims to export up to 7% of its production outside of Europe. Honda, Hyundai, Mitsubishi. Honda started production of the new 5-door hatchback Civic in late 2011, and Swindon will be the sole global production location for this model. There will be a new CR-V later on in 2012, and we're still waiting for news as to whether the next Jazz will indeed be made here in the UK. Hyundai Kia continued its upwards trajectory last year. We believe that by 2015 it will make over 1 million vehicles a year in Europe across its 4 plants in Russia, Czech Republic, Slovakia and Turkey. And this rise in production will be boosted by the addition of a new small model in Turkey by about 2014-2015. 3-shift production is in operation in the Czech Republic now, and the company has completed the production swap between the Slovak and the Czech plants, and the full-scale production is also underway in Russia. Mitsubishi, well, we still have our long-term doubts about the future of the Bourne factory. There's been no news since we last spoke, but we wonder whether this factory can survive in the long run. The French. PSA and Renault had very good financial performances in 2010 and the first half of last year, but these have now turned somewhat sour. PSA's automotive unit may only break even overall for 2011, suggesting that H2 will show a strong loss. Production of the 207 and the C3 has already slowed, and there are now new doubts about the future of the Aulnay factory in the north of Paris after 2014. No new model has definitively been allocated to this plant. We also have concerns about the long-term viability of the Madrid factory. PSA has got more than 50 teams working on finding 800 million euros worth of savings in its fixed structural and its purchasing costs. It's also refocusing its marketing and sales effort towards Asia. It will be producing vehicles in India within 2 years, and China will soon be its largest market. Renault too is also refocusing its business away from Europe, in this case mostly towards Brazil and Russia. It will take management control of Avtovaz in a joint enterprise with Nissan by March of this year. And the other thing of importance at Renault is the fact that it's the leading vehicle manufacturer in Europe in purpose-designed electric vehicles. It's made the brave decision to ignore hybrids, incidentally. Also contributing to Renault's position on a more positive level is Nissan, which is a major contributor to Renault's profits. Nissan UK had record production in both 2010 and 2011. And the significance to the UK, as we note, of the new Nissan Qashqai being designed, developed and manufactured here for global supply should not be underestimated. Dacia production also remains strong in Romania, and it's now growing fast in Russia. And in fact, strong European demand for Dacias led the new Renault Group factory in Morocco being initially allocated solely to Dacia. Tata, Jaguar Land Rover and Toyota. 2011 was a good year for Tata, Jaguar Land Rover. It announced it would build its own engine plant, construction of which has now started. There have been rumours this year already that it will expand the Halewood factory, and its new model lineup is growing rapidly and expanding. The Range Rover Evoque, released last year to great success, is simply the first of many new models. Further afield, it's now got CK production in operation in India, and full manufacturing in China is a distinct possibility, probably with Chery as a partner. Toyota, well, it was the hardest hit by the Japanese VMs, by the earthquake and tsunami. Its European plants, however, are now back to normal production rates, and in fact Valenciennes in France is back on 3-shift working. The Aris will be produced solely in the UK, no longer made in Turkey from later on this year, and the prospects for the UK plant have been boosted by the Avensis export contract for Japan. On a broader scale, Toyota Europe has been boosted by being allocated global development responsibility for the next generation of B and C segment cars. Volkswagen Group. Volkswagen continues to be the leading European vehicle manufacturing group. In 2011 it achieved record global sales of over 8 million vehicles, up 14%. Its fastest growing market outside of Europe, Asia Pacific, was up 20%, China specifically 17%, India more than doubling, NAFTA up 21%. Germany, by contrast, was up just 11%. It achieved growth at all its main brands, Volkswagen, Audi and Skoda, and indeed VW Commercial, all seeing double-digit growth. Even Seat, its problematic brand, rose 3%. All its major brands are seeing much wider model ranges coming into being now, and Audi in particular is expanding its range of Q-range SUVs. It's investing heavily in all its European plants, with 62 billion euros due to be invested by 2016 and 10 billion euros or more to be invested in China by the same date. It's had a shortage of production capacity in Germany in particular in the last year or so, and this has meant it's had to increase capacity both there and Germany. And this has also resulted in the decision regarding its North American plant being brought forward. Two problems with Volkswagen. First of all, its cross-shareholding alliance with Suzuki has come to an end following a number of disputes, and the merger with Porsche is problematic, and it could simply be replaced by a takeover of the manufacturing operations rather than a full legal merger. In conclusion, on the basis that we do not see a complete collapse in car sales, we expect 2012 production in Europe to be around 20.4 million. This is slightly lower than projected previously. We have tempered our production outlook as a result of the expected slowdown of the French vehicle companies Ford, Opel and potentially Fiat. 2011 has seen some disruption at the Japanese vehicle manufacturers due to the Thai floods and the earthquake tsunami, but the overall effect was less than anticipated, and lost production should be recovered by mid-2012. The overcapacity issue does appear to have been pushed to one side in Europe, but we wonder if it will soon rear its head again. We wonder, for example, how long can the Mitsubishi plant in Born in the Netherlands survive, and will PSA retain both the Madrid and the Alnay factories in the long run? 2012, of course, will also see a number of new plants come into full production, for example Fiat in Serbia, Ford at Craiova in Romania and Mercedes in Hungary. And the capacity issue will become problematic even more with the arrival of the Japanese in Turkey and rising Russian production. We think these will in the end present serious threats to marginal plants in Central Europe. However, it's also important to note the number of premium brands simply have not had enough capacity in recent years. Russia will certainly be the European focus for many vehicle manufacturers in the next few years, with Renault, Ford, Fiat, GM and VW helping to push the European, Korean and Japanese manufacturers to over 2.2 million units by 2016 in Russia. We will also expect to see strong production growth in the UK, Germany and Italy, each of which will see at least 500,000 vehicles produced there by 2016. Thank you for listening. We hope you've enjoyed the latest production outlook overview from the SMMT. This has been Ian Henry of Auto Analysis. Thank you for listening. Details of how to access the report are now on the screen.